Good evening, guys. Dave Santarelli here from the Santarelli Trading Exchange. I said I wanted to make a video tonight about why we must change trading strategies in this current type of market we're seeing. As you guys know, I am the owner of the Santarelli Trading Exchange. We have a large options trading educational site and alert service. So I want to take this time and go over a few things with you guys. I have no plan here in front of me, so I'm just going to be doing this as we go here because this is an important topic and I wanted to get this out tonight. All right, so first, guys, here is a chart of the Diamond ETF, which is the Dow ETF. All right, and as you see here, the chart goes from 2016 until current day. Each one of these candlesticks represent one trading day. And as you see, from 2016 all the way up until the first month of this year of 2018, we just had a steady rise in the market. And this has been a market that you could make a lot of money trading options or trading shares of stock, going long. If you had the patience to just buy and hold, you did very well. And with options, you could have bought calls and bought the breakouts, momentum trades. You could have done weekly, monthly trades when you've seen breakouts and momentum. It was a real easy market to make money and capitalize in. And what I want to show you guys right now is, first off, I get a lot of people messaging me asking me how to trade this market. They're losing. They don't know what they're doing wrong, and they have no idea how to make money or how to stop themselves from losing money. And first things first here, we're not in the same type of market that we were in for the past 6 years. The past 6 years has been easy money, and we haven't seen, let me zoom out a little bit here. As you see here, we haven't had any type of really sell-off unless we go back to 2008. When you see over here the type of sell-off and the decline that we had for a few months straight. Even if you go here mid 2011, you see a little bit of a selling pressure coming in just for this short period of time right here. Then the markets flattened out and then they started to rise again. And same thing right here. Just about a 1 month period, not even that, probably about a half of a month, where we just went off. Let me see here if I could see the dates. So right here is from August 17th of 2015, and then we bottomed out on August 27th, 2015, and then we started to rise again. So it was only a few weeks until we started to rise again. The problem now that I'm trying to tell you guys is if we go back to this chart here, let's go back here to, all right, so 2016 to current. That's the chart we're seeing in front of us for the Diamond ETF. And like I said, steady, slow rise until after the election, market started going haywire and started climbing rapidly. And what we're seeing now is lower highs, and it formed a channel. So right now I'm going to go over this with you. Let me get my tools out here. First off, let's create a channel that shows what we were in right here. So I'm just doing this, like I said, off. I can never get this to do this right here. So as you see, we had a nice channel that was nice and defined, and then we just broke out. Now let me share this with you guys. All right, so let me change the settings here. right now, basically what we're seeing is the markets are failing to break out of this channel. As you see here, let's zoom in a little bit more. Like I said, each one of these candlesticks represent one trading day. So as you see here, markets took a dive and we hit a low, and then we tried to rebound. It failed here. We dropped back down, made a lower high, failed to break out of this downward channel. We broke down again, went to the channel, the outer band of the channel here, and we failed again to break out of this channel. So like I'm saying, guys, I'm seeing a lot of investors, traders, day traders, swing traders, momentum traders. They're trying to pick. They're trying to pick when this market's going to rebound because they're so used to seeing the market steadily climbing for the past several years. And I just don't think that's going to be the case anytime soon until after we see it break out of this channel. I shared a chart on this. Let me get the chart up. All right, so I just brought up a chart that I shared in the trade room of the Santarelli Trading Exchange. And I shared this with members on, it was either Monday or Tuesday. This is just a picture, so I can't actually go and see what candle this is here. But it was either Monday or Tuesday. And I told them that we failed to break the downward channel past 3 times. I said I do think the channel will break the major downtrend channel this time with the current news of Q1 earnings as a catalyst. But we just got news about Syria, about Russia, about missiles being launched, and this was before the the FBI raided Cohen's, which is Trump's attorney's office. So I wrote this and did this chart before all that happened. Now that we have those events that transpired and took place, it's going to be really hard to break out of this channel here. So I have the green arrow here showing that if we do break out of this channel, that would be my signal to buy, maybe do some calls overnight or weekly trades, maybe get into a monthly call and then sell. And that's only if we have that trigger of us breaking out of this downward channel. Now what's going to happen, like I said, if we go back here on E-Trade, we see that we just did the same thing. So we rose up to the outer band of this channel here, this downward channel, and what happened? We got right to it. If you look here, we got right to it, and we couldn't break above it, and we ended up going back down here. So what we're going to have to do over the course of the next few weeks here is there's a few types of strategies we could use. Either one, this is something else I needed to go over here. I wrote down a few key topics here. So let's take a look at the candlesticks for the past few years here. So as we see the candlesticks for the past few years, they've been nothing major like we're seeing here. You see these large candlesticks. They're 5 to 10 times larger than any of the candlesticks we see for the past several years. That's telling us that we have increased volatility and increased volume in the markets. And you could clearly see that here by the volume of 17.5 million shares and just on a single candle compared to something over here which only has about 2.5 million. So volume spiked, candlesticks got much larger, and like I said, we have volatility and we have a market that just isn't trading the way it has been. So what do? There's a few ways you can take advantage of this market. A, you could day trade. This is a day trader's dream here. You're entering positions intraday and you're exiting before the bell closes. You could do that by simply watching, like for example, I would watch the 3-minute candlestick chart. I would use the 5, 10, 20-day SMAs. I would use the opening range as a signal there for day trades. There's many different things you can do. But like I said here, if we start to fall again here, we could easily get back down to Dow 23,600, which is the diamond 236. So we could easily do that if we decide to break down. All we need is a little catalyst like a war in Syria, sending missiles and having Russia take them out of the skies like Putin just announced today. And Trump retweeted about he has smarter and better missiles. So it's really coming down to a showdown of when the missiles are going to be launched and how the market's going to react to that news. We see oil climbing, gold climbing. That's your safe havens when you have a sell-off or when you have any type of selling pressure in the markets. Usually the large funds like to get into safe haven type of stocks, something that's not too volatile and something that's not going to provide them with losses or any type of large swings like we see in tech where we have 4 to 6% sell-offs in a single day. So right now, oil stocks, UCO, that's an ETF. You could trade Chevron, ExxonMobil, gold, GLD, GOLD. There's many types of ETFs and shares of stock that you can trade if you want to play it safe. And honestly, that's what I've been teaching and preaching to TSC members over the past few weeks. Once this market really started to turn and a few of our trades went against us and I didn't like the way the markets were moving, I told members that we just had to hold off until we seen the right trade setups. For example, we made a trade the other day on Tuesday on Facebook. We just bought some calls ahead of the hearing. We had a nice breakout. We had a 4 to 5 point move higher on Facebook shares. We made a quick 117% on those. Some members even made larger gains on that, and then we exited the next day. So it's important to really watch support and resistance areas, watch your SMAs, watch your MACDs, your RSI, and really focus in on here. I do have a few Word documents that I would like to provide to anyone and everyone, regardless if you're a TSE member or not, because I do believe that I feel the need to help people in this type of market. I don't want to see people blowing their accounts, which a lot of people are doing now. I actually have a good friend of mine that actually blew their account, and they have a GoFundMe page, and I don't want to see anyone taking drastic measures like that. So like I said, guys, you have to be cautious in this market. And you really have to go by what the market is telling you. And current analysis, technical analysis of the markets are telling us that we're in a downward trend and there's nothing here to provide us with any type of trigger or any type of catalyst besides for Q1 earnings that we may go higher, because the economy is strong, jobs are pretty strong. That's really the only thing going for us now. Like I said, we have news that's affecting the market. We have war that's affecting the market. Trump affecting the market with him, with Mueller raiding his attorney's office, and just a lot of people resigning in his cabinet, in his office. So there's a lot going on, guys, and I just want to make sure you're aware of this so you're not getting into anything long here until, like I said, we have to see some type of trigger, some type of event, some type of catalyst that's going to make us go long and tell us that the markets do want to have a rebound here. Because as of right now, we're just making lower highs. As you see here, we made a high here, a lower high here, lower high here, and a lower high here. And every time we got to this outer band, it just failed that as a resistance, and we had a sharp pullback down to some support levels. So we need to see what happens here. Tomorrow and Friday are going to tell us quite a bit. If we could break this outer band here of this channel, I do think we could see some buyers stepping in ahead of Q1 earnings. We have major tech, for example. Let's take a look here at the earnings calendar. Amazon, for example, is going to be reporting on Wednesday, April 25th. Google, I think, is right around the same day. They're on the 23rd. Facebook, I think that's a month later, May. No, that's on the 25th as well. Microsoft's reporting on the 26th. So we have major tech reporting basically from Monday, April 23rd to the 26th. So what I would do, see if we could break that channel. If we do, then I would be a short time, cautiously buyer of this market ahead of Q1s as an earnings catalyst. But as of right now, you cannot go long. You cannot make any type of directional trades. Like I said, unless you see us getting up to this outer band here and you want to short the market or buy some puts, we could possibly do that. But like I said, the best thing to do if you don't have a lot of money to risk is wait until we get that trigger, wait until we get confirmation, and wait until the market provides us with the right timing and the right trade setups. That's crucial. That's extremely important, is to just wait. If waiting is going to save you, think of this. If waiting 2 to 3 weeks is going to save you, if you have a $10,000 account and you go to try to make some trades in this market, you blow your account, you just lost $10,000. If you wait for 2-3 weeks or longer or shorter, depending on what the market does for the right trade setups, and then place some trades when we see the signals and we see confirmation providing us with certain trades, then we go ahead and make those trades and start making money in the market. Like I said, right now it's going to be day trading or short-term trades overnight. That's what we're going to start doing here at TSE. We are not a day trading service, but we have to trade with current market conditions and current market trends. And right now I feel the opportunity to make some money day trading, and overnight trading, maybe a day or two, is here. We have large volatility, large swings, and if we be patient and wait for the right setups here, we can possibly make some large profits and large percent returns intraday or overnight. So that's what I wanted to share with you guys tonight. Like I said, if you just look at this chart here, it's just been nothing but a steady incline for years here. This goes all the way back to right before the financial meltdown. You see the financial meltdown lasted from, what's this? May of 2008 until we bottomed in March of 2009. So it lasted quite a while there. And with the current condition we're seeing now, I do think we could see Dow back down to below 21,000. I mean, think about that. Dow's at 24,200 right now. That's over a 3,000 point decline from where we're at now. That's another 10% move or more, 10 to 15% move lower that we can possibly go. And like I said, that's all dependent on the news. If there's any type of war, what's going to happen with the Mueller investigations, with the lawyer's raid of Cohen's office. So we have a lot to watch for, guys. And like I said, so right now in this type of market back here for the past 7 years, or 10 years for that matter, it was easy to make money. You could jump in, buy some calls, and if you just had a few months till Expo, or if you're trading breakouts, momentum, you made some easy money and quick profits. And you know, that's why TSE grew as large as we did, is because the money was so easy to make during this time period. Now the hardest part, and this is really where it comes down to being a good trader and knowing what you're doing, is you have to have that psychology. You have to have that mind frame to be able to reverse what you've been doing for years, for a decade, and be able to just on a flip of a switch do the opposite. And that's where traders really struggles with the psychology of trading and doing the opposite of what they've been doing for so long, for so many years. So like I said, right now we're in a bearish market, we're in a correction, and we just have to follow the trend and wait for the right trade signals, for breakouts, breakdowns, support, resistance, and we have to watch the SMAs, the RSI, and MACD levels. And like I said, guys, I don't care if you're a TSE member or not. I have about 100 Word documents I've created for TSE that was specifically for members. topics like trading plans, how to exit a position, how to find entries that I'd be happy to share with you just to help prevent you from thinking that you have to go long when you see these large sell-offs. Because every time we see the market climbing, I'm seeing people saying, I'm buying puts right now, I'm buying puts. And then the next day the market climbs, we're having these large volatile swings. The market climbs 300-400 points, and then they have a total loss on that trade. They lock it in, have a loss, and then their accounts are devastated. So I want to help prevent you from having that happen. And you can do that by simply watching the charts and doing some simple technical analysis. You don't have to read too deep. People tell me about pennants, about so many different things that they've learned, and it's really it's following the market, the trend, and the conditions. Like you see here, here's a simple channel. It's showing you the limits of where we need to break before we have confirmation of a reversal of the trend. And we just have to watch. If you want to day trade, we watch intraday markets. It's simple. If you go to a 3-minute chart here, and you could trade. I mean, if you're a trader, you could see simple resistance, support areas, and you could easily trade those once you see the timing. So that's about it, guys. I really hope this helped. I just want to get you out of that mind frame of thinking that you have to be buyers, you have to buy calls, you have to buy shares. Wait until the market gives you that signal. Wait until you have a confirmation or a trigger. And like I said, guys, if you need any help, we're here. If you'd like to sign up for a service, it's the santarelliexchange.com. And we have some promo codes going on. I don't know what they are. So you could do a search and see what promo codes are out there. I know one of them is tax break, all capital letters. It's for a large discount off our year service. And then we have a discount off the 1-month service if you want to try it out first. I think it's $79. Not too sure, but normal service is $200 a month. And like I said, we have over 1,000 members. So if you'd like to come join us, feel free. If not, that's okay. I'm still here to help, and I'm still going to be posting charts. You just won't get my specific trades. So if there's anything I can help you guys with, I'm here. As you've seen for the past week, I've really been busting my chops, posting charts everywhere for you guys to see in our Facebook group, Day Trading Stock and Options Room, the Santarelli Exchange, the Santarelli Exchange business page, and on my personal Facebook page. So if you'd like to ask us any questions, feel free to comment on this video. You could contact me. I'm on Facebook, Dave Santarelli. And of course on our business page, the Santarelli Exchange, and on our website, dave@thesantarelliexchange.com. I hope you guys have a fantastic evening, a great night. God bless, and let's make some profits, guys. Take care.